Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Ellington Credit Co, traded on New York Stock Exchange under symbol EARN, is a financial services company that has, like its peers, has seen its share price trend steadily higher since beginning of November 2023. That's when the Federal Reserve said it was done raising its key lending rates. In December, it held its rates, but this time said cuts were on the cards. Investors cheered and interest rate sensitive stocks received an early lift. Since the start of November, EARN stock has rallied an impressive 44%. John?
Yeah, thanks, Mo. We've actually looked at Ellington Credit Company a number of times, but until April of 2024, it was known as Ellington Residential Mortgage REIT. Ellington was initially formed as a REIT that invested in residential-backed securities, but in late March of 2024, the company's board approved a strategic transformation to focus on corporate collateralized loan obligations, or CLOs. The company is looking to build upon its CLO portfolio with an emphasis on secondary CLO, mezzanine debt, and equity tranches. Along with the rebranding, the new focus, the company is looking to build upon its CLO portfolio with an emphasis on secondary CLO, mezzanine debt, and equity tranches. Now, along with the rebranding, the new focus, the company opted to no longer be taxed as a REIT.
Before we go into any details, for those who are watching Income Investor, can you explain what a CLO is?
Yeah, it's actually like a high-yielding, scalable, floating rate investment alternative to corporate bonds. They're actually a $970 billion asset class within the $12 trillion structured credit fixed income market. CLOs make money from an actively managed, diversified pool of senior secured corporate loans. Now, these investments are typically secured by companies' assets and ranked first in priority of payment ahead of unsecured debt should a client ever go bankrupt. Now, like any investment, CLOs still come with risk, but the combination of a diversified, actively managed senior secured loan collateral has resulted in low default rates compared to corporate debt. Now, to cloudy the waters a little more, Ellington also said it intends to convert to a closed-end fund, or CEF, later this year. Now, a CEF is a type of mutual fund with a portfolio of securities. Like an exchange-traded fund, CEFs are traded on the stock market, but unlike an ETF, the number of outstanding shares are fixed. CEFs are also actively managed, where ETFs are not.
And now, looking at the portfolio, it's more than doubled its CLO portfolio in the first quarter of this year.
Yeah, for the first quarter ended March 31st, 2024, Ellington Credit generated net income of $4 million, or 20 cents per share. It also reported adjusted distributable earnings of 27 cents per share, which, as you'll soon hear, is more than enough to cover its dividend. During the quarter, the company more than doubled its CLO portfolio to $45 million, including investment activity through March 13th, which is the day before the company announced its financial results. The Ellington CLO portfolio stood at $60 million. Now, to put that number into perspective, at the end of 2023, the company's CLO portfolio stood at just $17.4 million. Now, over the same period, the size of its residential mortgage-backed security holdings increased 1.5%. quarter over quarter to $739.3 million.
This company actually pays monthly dividend, and it has maintained its dividends at 8 cents per share.
Yeah, driven in large part by the company's excellent performance from its CLO portfolio. Ellington generated adjusted distributable earnings of 27 cents per share, which, as noted, is more than enough to cover its 8 cents per share monthly dividend, which works out to 24 cents on a quarterly basis. This works out to an annual distribution of 96 cents per share, for a current forward dividend yield of a pretty frothy 13.4%. Now, looking ahead, management said that once its conversion to a CEF is complete, the new structure should allow it to access more favorable cost of capital to drive future growth, all of which is expected to help fuel adjusted distributable earnings and dividend growth.
And looking at EARN stock performance, it's doing quite well. It's up 21% in 2024.
Yeah, typically a company with a high dividend yield comes with a lower share price, but this isn't the case with EARN stock. It's actually been performing, as you said, really well since early November, advancing 44%. As of this recording, it's currently trading at around $7.10 per share. This puts it up 21% year to date. That's well below its June 2021 record high of $9.36 per share. But the outlook for EARN stock remains pretty solid. In 2023, Ellington reported net income of 31 cents per share. In 2024, analysts expect earnings per share to climb to $1.06 per share and inch up to $1.11 per share in 2025. And as we all know, strong earnings growth and an encouraging outlook can help juice a company's share price. And actually, this has led Wall Street analysts to provide a 12-month share price target of $8 per share.
Thanks, John, for your insights. Just to recap, Ellington Credit Co has transitioned from a REIT to a strategy focused on CLOs. Since the end of 2023, the company's CLO portfolio has more than doubled to $60 million, with plans to drive it above $100 million. The focus on CLO investment is expected to enhance earnings, reduce volatility, drive book value growth, increase adjusted distributable earnings, and dividend growth. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.